Very good morning, all the students. I start today's session with Bismillah Rahman Rahim. Uh, Today's resource person CA Mahesh Atre sir. Sir is a renowned chartered accountant in Pune, and sir is a faculty at Pune College. Sir has more than 25 years of experience, and sir's specialization is taxation. Sir, without further delay, I request you to kindly guide MCOM Part 2 students. We have direct tax consultant skill development course. In that we would like to know more about income tax. Sir, I request you to kindly take over the session. Thank you, sir.
Okay, thank you, sir. I am very thankful to the college. I'm thankful to the our commerce department. I'm very thankful to the Dr. Vakil sir for giving me an opportunity to discuss with MCOM students, because now they are going to be the postgraduate students very soon, and I'm having very what do you call welcome all of you for giving this me opportunity. Now, going through directly on the subject, the direct tax. Please try to understand. Tax is the main source of revenue of government. Now, when I'm going to use the word government, means it is of three types. Government, first is central government, second one is state government, and the third one is local authority. Now, try to understand. Particularly in India, when we are talking about the taxation, now we are going to talk about particularly in India. Now, in this case, we have to be very careful about that. Every government, whether it is a central government, whether it is a state government or local authority, maybe the municipality or gram panchayat, all are interested to get the revenue, and they are imposing the taxes. Now, why I am using the word imposing? Because it is always tax is a burden. Whether it is a direct tax or whether it is an indirect tax, those tax is a burden. ऐसा होता है कि ऐसे बात भी करते हैं कि death and taxes are certain, so you cannot avoid taxation. Now that's why we have to be very careful about the taxation, because we cannot avoid it, but we can do planning properly, and by which the burden is going to be reduced to very large extent. Now, whenever we are going to talk about the tax, basically the tax is of two types: direct tax and indirect tax. Now, what is meant by direct tax? Those who are my students who have already attended my lectures, who have already studied the taxation, they may be knowing all these things. They may get some boring, but those who are newcomers, it is my duty to just update the knowledge and just to inform them about the taxation system in India. That's why please bear with me. So that is basically, please try to understand, the tax is of two types: direct tax and indirect tax. Now, why we call it as a direct tax? Because the direct tax means the burden of the tax. In the definition it is given, it is a burden of the tax which one cannot divert, which we cannot pass on to another person. So the person who is liable to pay the tax, that person is not in a position to carry forward. They are not in a position to pass on this burden to another person. So it is directly affecting the person. Now, please try to understand, in India, only income tax is the direct tax. All other taxes are indirect taxes. Previously, a very long time back, wealth tax and gift tax, two taxes were also covered in the direct tax, but government has abolished these two act, wealth tax as also and gift tax. So only in India, only tax is here is the direct tax. Now, another thing is that in direct tax, the calculation of tax is very, very clear. It is directly you can calculate, and you have to pay of your own. So you cannot shift the burden to any other person. जो जिसको टैक्स है उसको भरना ही पड़ता है. उसका जो दायित्व है देने का जो है, वो किसी को दूसरे को पास ऑन कर नहीं सकता. So that we call as a direct tax. Now, just for the information, we also just take few minutes to discuss about the indirect taxes, and then I will switch over again to the direct tax, in particular in India. Now, what is meant by indirect tax? Indirect tax means tax, but the burden of the tax is shifted from one person to another. That is, the tax is levied on certain person, but once he has going to pay the tax to the government, then the tax is shifted from one person to another. He is going to recover the tax from another person while giving services, while selling the goods or any other item. So that burden of tax is on one person. Sorry, the levy of the tax, the charge is on one person, and it is shifted to another person from person to person. So in the indirect tax, the main thing is that the person who is contributing tax to the government may not be knowing how much he is contributing to the government, because he is contributing to the government, he is paying the taxes indirectly. Now, if even though you are going to ask me how much tax you have paid during 25-26, in case of direct tax, it is very easy to calculate. I can show it everybody. But in case of indirect tax, for me also, even though I'm a professional, even though I'm maintaining books of accounts, it is very difficult to find out how much tax I have contributed by way of indirectly. Now you are going to ask me question why? Because I have already paid for petrol. I am paying for mobile bill. I am paying for telephone charges, internet charges. Everywhere the GST is involved, and I am not keeping separately the register of how much I am going to contribute. So I am not avoiding the tax, but unfortunately I am not having any documents or any record to show anybody, another person, regarding how much I have contributed by way of indirect taxes. So indirect tax means the burden of the tax shifted from one person to another. Now, coming back to the direct tax, because we are going to concentrate on direct tax and its provision. Now, in case of direct tax, Income Tax Act 1961 is applicable. Now, please try to understand why I am using the word Income Tax Act 1961. The Act is of 1961. The provisions are changes every year by way of budget. So, the provisions, the main structure is the Act of 1961. But the provisions are changing from every year to year, by time to time. How they are going to change the provisions? The provisions are changed through the budget. So central government, by way of finance minister, they are every year they are presenting the budget, and the budget is for the next year. So in that budget they are giving in detail the provisions they are going to likely to be changed, they are modified and inserting the new provisions also. But the structure of the tax is the same. That means that Income Tax Act is of 1961. Now government has already proposed the Income Tax Act 1925, but it is a draft, in a draft mode, and it is not yet applicable. Maybe from 1st April 2026 it is going to be in use. It is going, the finance minister will announce very soon, maybe in the budget, regarding the introduction of the new act. So at present we are using Income Tax Act 1961. Now, what is the main criteria, salient features of the tax? First is Income Tax Act is a direct tax, and it is applicable to whole India. Whether you are a state of Maharashtra, whether you are a state of Gujarat, whether you are in Karnataka or Andhra Pradesh, it is uniform. It is tax, Income Tax Act is a uniform. So even though you are shifted by way of transfer from one place to another, or one state to another state, the tax position is not going to change, because it is universally applicable to all states as a same one. There is no change. So try to understand, it is applicable for whole India. Another important thing in case of direct tax is that the government is imposing this tax, or government is charging this tax. The policy of the government is very clear. Then naturally one person is going to ask why you are charging direct tax. The government is going to say there are two reasons. First is that economic reasons. We are collecting, that means government is going to say we are collecting the taxes for economic development. Naturally, maybe for infrastructure purpose, maybe for development purpose. Even if you are referring any advertisement at the time of advance tax, they are going to say persons who contribute to the income tax for the construction of bridge, railways, maybe for dams and roads, like that infrastructure, maybe power project, like that. So government is going to say we are collecting this income tax our main objective is economic development. We require funds, and that we are going to collect by way of income tax. That is one thing. But government is going to say further. They are going to say merely economic development, economic purpose is not our main only objective of collecting the tax. Now, second objective is that we are collecting for social purpose. Now, what is meant by social purpose? The government is going to say it is our responsibility to do something for poor, needy person, and we are collecting the tax from the rich person. Now, to reduce the inequality of income is the objective of the government, and government is going to say by way of imposing tax, income tax, we are collecting more funds, more and more funds from rich person. Now they are using the word the capacity to pay, ability to pay. Now you are going to ask me the question whether this whether the government is fulfilling this condition. Partly it is definitely correct, because they are the taxation system in India is of progressive nature. Now what is meant by progressive? Progressive means as and when there is an increase in income, there is an increase in tax. इसका मतलब होता है जैसा तुम्हारा इनकम आबादी बढ़ेगी, प्राप्ति बढ़ेगी, उसी वक्त वो तुम्हारा टैक्स भी बढ़ेगा. So we call it as a progressive taxation system. So please note, when government is going to say this, the another reason is that government is going to say for an individual, we are having a slab. That those having income less than the basic slab, they need not have to pay the tax. So we are exempting the poor people from contributing direct tax, and we are achieving economic benefit. Now what they are going to say? They are going to say we are having the slab rates. That means we are first of all our slab rate is going to be for a minimum rate, maybe 5%, then after 10%, that we are going to discuss later on. It may be 15%, and maximum is going to be 30%. Similarly, the government is also going to say those who are rich person, those who are having sizable amount of money, they are supposed to pay the surcharge also. Now, what is meant by surcharge? Surcharge means tax on tax. That means first of all you have to calculate the tax, and later on you have to calculate the surcharge. So the rich people or the wealthy people, they have to pay not only the tax, but they have to pay surcharge. So the government is going to say we are having progressive tax system, and according to the progressive tax system, we are increasing tax rates, tax according to slabs, as and when there is an increase in income, there is an increase in tax. Now I can say, very authoritatively I am going to say that my student, every person has supposed to pay the tax. Now my intention is that means you must get income more and more every year. So my intention is not regarding the payment of tax, but my intention is that everyone should get more and more income. Naturally you have to pay the tax more. That is definitely. You can calculate by any means. That again we are going to discuss about the heads of income. In that case, we are going to find out how the income is going to increase simultaneously. The tax is also going to increase. So please try to understand the government policy. Just I am going to revise. The government is going to collect. The main objective of the government is of two types. First is economic objective, and second is to achieve the social benefits, to achieve the social objective, to reduce the inequality of income. Now government is also further going to say whatever excess amount we are going to collect or by way of taxes, that amount we are going to use for the charitable purpose, maybe for by way of public trust. They are giving concessions, they are giving facility to the poor. That government is introducing number of schemes. Anyway, the basic objective is very clear: economic objective and social objective. Now we are not going to discuss about whether it is actually achieved or not. We are not concerned with that. That is different issue. Now going further. Now regarding the tax, first of all we have to discuss about some definition. Actually, the income tax under section 2, they have given income tax act under section 2, they have given number of definition, but the government failed to give the exact definition of income. What government is going to say? Income includes so many things, but they will not say it just whether give the exact definition of income. No, income includes inclusive of definition. They are going to add, but that means it is our duty as a assessee or as a taxpayer to find out whether our income is coming in the tax bracket, whether we are liable to pay tax or not. For that purpose, we have to check the definition of income under the Income Tax Act under Section 2. Now, another thing is that the government has given the definition who is liable to pay the tax. So they are using the word person. Now, what is meant by person? Person means individual. Person means HUF. Person means partnership firm, LLP. Person means private limited company, public limited company, corporate assessee. Person may be a local authority. Person may be AOP and BOI, as well as the artificial judicial person. So government has given the criteria that you have to pay the tax according to your category. That means whether you are individual, whether you are a HUF, whether you are a LLP or partnership firm, private limited company, like that. Now, why I am telling you this? Because the rates are of two types. Government is imposing the tax, government is charging the tax by two ways. Now, one way I have already discussed with you, that is slab rate. That slab rate is applicable to very few institutions or very few persons. Otherwise, the government is going to charge at flat rate. That means slab rates are different and flat rates are different. Slab rate means up to certain limit there is no tax. And then when there is an increase in income, the tax rates going upwards increases by slab wise. Now, what is meant by flat rate? Flat rate means you are supposed to charge directly the income tax directly. What is meant by directly? That means suppose in case of a partnership firm, your profit is 1 rupee, 100 rupees, 1 lakh, 1 crore. The flat rate is 30%. That means they are not providing, government is not providing you the slab wise. You should not pay the tax slab wise. There is no slab at all. You directly have to pay 30% tax. Whether you are earning profit 1 rupee, 100 rupees, 1000 rupees, 1 lakh rupees, and so on. So the government is using the tools to tax income by two ways. One is slab rate and another is flat rate. And there are certain heads of income where the government is using both the tools. That means either some income is going to be charged at slab rate and another some income may be at the flat rate. So please try to understand that the government has authority, they have power to tax both ways, that is slab rate and flat rate. But another thing you have to keep in mind, that the government is not charging the same income by both ways. That means one income is there and government is imposing the tax slab rate as well as flat rate, and that is not possible, and that government is not going to do that kind of thing. So very clear, income tax. So income tax is of progressive nature. It is applicable to the whole India. The Central Board of Direct Taxation, we call CBDT, they are the highest authority. They are giving guidance regarding the chargeability, regarding the any query. They are supposed to be the providing guidance, frequent ask questions, FAQ. So they are the highest authority in India. Going further, now we have already discussed about the basic things. Now going further, the income tax again classified for your information, because very soon you are going to join industry, you are going to join, you start your own business, maybe your own profession, like that. So you cannot escape from the tax. So in case of income tax, you have to be very careful about your taxation, because the government is going to classify the tax in three parts. First is corporate tax, second is non-corporate tax, and third is international tax. Now, when you are going to check your income, it is your duty to check whether your income is taxable or not. So accordingly, you have to check whether you are going to suppose the tax as a corporate tax, whether as a or non-corporate tax, or whether it is an international tax. So it is very careful. Now again, you are going to ask me the question: what is the criteria? What is the criteria for chargeability. The criteria is that your status, whether you are an individual, whether you are a partnership firm, HUF, whether you are a private limited company, public limited company, local authority, AOP, BOI, like that. So first of all, you have to select your status. You have to check your status. Second thing is that after checking your status, you have to check for your residential status, whether you are a non-resident or whether you are a resident of India. Now, if you are a resident of India and you are an individual, you are supposed to pay the non-corporate tax. If you are an individual but you are a non-resident of India, then you have to pay the taxation as an international tax. So the chargeability is going to be different, and it is dependent on the taxation policy as per your status you are holding. Now going ahead with this, so the even just for your information, the government is having their own separate department to collect the corporate tax, to collect the non-corporate tax, and to collect the international tax. So the government is having their different offices at different places, and they are following the practice of collecting the corporate tax, non-corporate tax, as well as international tax. Similarly, while you are going to pay the tax, when you are going to pay the tax, naturally you have to write down your name, address, your PAN number and all, but also you have to select the corporate tax, whether you are paying corporate tax or non-corporate tax. Otherwise, you will not get the proper credit of the taxes paid by you. So the government is going to collect the taxes by three ways. That is by way of corporate tax, by way of non-corporate tax, and as well as international tax. Going ahead further, regarding the income tax, the definition is given in under section 2. Now, first of all, we are going to see the income. The income is further classified. Please try to understand. The income is further classified into two parts. That is, first is income exempt from tax, and another is taxable income or income chargeable to tax. So, first of all, what we are supposed to do? First of all, we are going to check the status, whether we are a individual or a partnership firm. We are talking about the category of the person. Second thing, we are going to check the residential status of the person, maybe resident of India, non-resident, like that. Now, once it is clear, then we go ahead with the determination of the income. So, first of all, we are going to check the definition, and we are going to see whatever income we are earning or we have earned. We are going to classify whether it is a income exempt from tax or whether it is a income chargeable to tax. Government has given certain criteria. That list is given under section 10, that the income following under this section 10 is exempt from tax. Now please try to understand. The income is coming under the head income, that is definition of income, but the tax is not paid. So try to understand, the income is coming under the head income, definition of income, but the person is not liable to pay the tax. Now take the example in one case, the very common, that is the agricultural income. A person is earning income by getting agricultural activity, then only if it is an agricultural activity, irrespective of his income, even though it is income, it is exempt from tax. That means the person is not supposed to pay any tax on purely agricultural income. Second thing is that interest on PPF. Suppose a person is getting interest on PPF, so then he is not liable to pay the tax on it. So again, the question is that whether the agricultural income, interest on PPF is income or not. Yes, it is income, but income is exempt from tax. Even though it is an income, it is not liable to pay the tax. Government has given some concession that this criteria, if you are having the income from agriculture, income from interest on PPF, like that, then it is exempt. You need not have to pay the tax. Second thing, now we are going to find out the taxable income. Which are going to be the taxable income? So the government has given all other income which is not coming under section 10 is going to be the taxable income. The person is liable to pay the tax on it. Now, once we are going to come under the income from chargeability of the tax, further we are going to say the charge. For that purpose, government has given the heads of income. Now we have to classify income under the 5 heads. You may be knowing income from salary, income from house property, income from business or profession, capital gain, and the last one is income from other sources. Now please try to understand. You may ask me question, those who are newcomer, those who are not studied taxation, they are going to ask, पहले मैंने बताया तुमको कि इनकम इज गोइंग टू बी टैक्सेबल एज ए होल, और अभी मैं क्लासिफाई क्यों कर रहा हूँ? व्हाई वी आर द गवर्नमेंट इज गोइंग टू से it is necessary to pay the tax on whole income, but the provisions, the concession, the deductions are going to be different under the different heads. So the government is going to say, first of all, you have to check your income, classify the income under the head income exempt from tax, upkeep separately that, and then income chargeable to tax, which is your income on which you are supposed to pay the tax. Classify the income under the 5 heads. That is income from salary, income from house property, income from business or profession. Next is capital gain, and the last is income from other sources. Why it is so? So government is going to say classify your income according to the nature of business, nature of activity, and you will get some concession under that head, under that category, and take the benefit of that provisions. So in case of income from salary, there are certain deductions available which are not available in other heads of income. Same is the case income from house property. There are certain deductions which are available which are not available in other heads of income. So it is our duty, and it is for the benefit of our own, it is necessary to classify the income under the 5 heads of income. So first of all, we are going to discuss one by one. That is, first is income from salary. You know it very well. Income from salary means the person who is getting any amount from his employer, we call as a income from salary. It is a cover everything. What is the criteria? Now, naturally, what is the criteria for coming the income under the head income from salary? The criteria is that the relationship. If the relationship between the two persons is of employer and employee, try to understand. If the relation between two persons is of employer and employee, then it is going to be taxable under the head income from salary. If the relation is of not of employer and employee, then even though there is a payment from one person to another, it is not covered under the income from salary. Now, if the relation is of principal and agent, it is if the relationship is of contractor and subcontractor, the relationship is there. They are doing an activity, but it is not coming under the head income from salary. Now, the relationship is very important, and you have to check the relationship. Now, the salary includes all, provided the relationship is of employer and employee. So, we call it as a remuneration to directors. If the directors are employee of the company, then we call it as a remuneration of director is taxable under the head income from salary. Similarly, salary paid to the staff. Similarly, wages paid to the workers. If they are going to be the employee of the company, employee of the organization, then it is going to be the income from salary. So you may call it as a remuneration, another may call it as a salary, another may call it as a wages. You give any nomenclature, any name you can call it. It is going to be a income from salary, because the first condition is that the relationship between the two persons must be of employer and employee. So any income getting from employer to the employee is going to be the income from salary. Now, going ahead, if the salary includes number of things. Try to understand. Salary may be of 2 types. First is given the consolidated salary. That means employer is going to select the employee and he is going to say, yes, I am going to pay you rupees 50,000 per month, but don't ask me the breakup. I am giving you 50,000 to you per month. This is we called as a consolidated salary. Another criteria is that they are giving the breakup of the salary. Now, it is depending upon the employer, the policy of the company, how to pay the salary to the employee. Now, salary may be payable in the form of what you call monthly payment. It may be a weekly payment. It may be a quarterly payment. Maybe provided during the year the amount is paid from employer to employee. For for that purpose, we have to keep in one thing in mind. So we have to check the year, the Income Tax Act. They are going to say the previous year. It's starting from 1st April, ending on 31st March. So how to calculate the income for particular year? We are going to check the income received from 1st April onwards to 31st March. So then we are going to take the total, and then we are going to call it as a salary. So mode may be of any type. Salary may be paid in electronically transfer. It may be by through net banking. It may be by cash, by check. Once the payment is done by the employer to employee, and the relationships of employer and employee, then it is going to be the income from salary. So very clear. Now we have already discussed about the consolidated salary. Now what about the breakup of the salary? Now you may be knowing, those who are working, you may be knowing the salary breakup is like that. It may be a basic salary. It may be allowances are given. Different and various allowances are given to the employee. Maybe the dearness allowance, we call it as a DA, house rent allowance, HRA. It may be a transport allowance, traveling allowance. Like number of allowances, tiffin allowance is there, uniform allowances are there. So any type of allowances is included as a part of salary. So take the first of all, salary means basic. It may be allowances. There may be anything paid in addition to salary. Incentive. It may be a bonus. It may be a overtime bonus. It may be of profit in lieu of salary, perquisites. It may be possible that the government is or the employer is going to provide you the accommodation, rent-free accommodation, furnished accommodation. They may provide you the staff. They may provide you the perquisites like computer, maybe the mobile, like that. So everything is included as a payment done by the employer to the employee is coming under the head income from salary. So salary may be a basic salary. It may be a allowances. It includes salary in lieu of allowances. It includes perquisites and extra benefits given by the employer to employee. So it is going to be the income from salary. So maybe salary you call as remuneration, you may be calling as salary, it may be a wages or payments, whatever you are calling it, it is going to be income from salary. Now let us check about the deductions and the provisions for income from salary. Again, I am not going in detail, but for your just information, again the allowances are classified under the two heads. Just we have already classified the income like taxable income and exempt income. Similarly, certain allowances government is giving, which are or government or rather employer is giving, which are exempted, on which the tax is not liable to pay. And on another allowances, most of the allowances are taxable. That means if the government is paying you, employer is going to pay you the allowances, in that case you have to pay the tax. So further classification is there. So now we have to be very careful about this, and while calculating our tax, हमको देखना पड़ेगा कौन सा हमको बेनिफिट मिल रहा है, कौन सा एग्जम्प्ट है, कहाँ के ऊपर हमको कुछ बेनिफिट मिलता है, उसके बाद ही हम इनकम फ्रॉम सैलरी कैलकुलेट करेंगे. सो आवर फर्स्ट ड्यूटी इज दैट टू चेक वेदर द इनकम इज कमिंग अंडर द हेड इनकम फ्रॉम सैलरी. Secondly, going ahead, which income is exempt from tax, or maybe the allowances are exempt, some concessions are given, some deductions are given. And going further, then we are going to calculate the taxable income from salary. In between, there is another provision. Certain deductions are given. Now, certain deductions are given only under the head income from salary, which is these deductions are not applicable to other heads of income. Now, the standard deduction. Now, the standard deduction means the deduction is available to the salary class person if he is getting income from salary during that year. Now, before discussing this income from salary, it is necessary to discuss two things. There are two regimes. Do you know old regime and a new regime? So, government has introduced new regime in addition to the old regime. Government is continuing with the old regime, but the government is going to say in the old regime calculation is difficult. You have to take into account number of benefits, number of rebates, number of concessions and deductions, and then you have to arrive at the tax. Government has reduced number of deductions, allowances, benefits, and all that, and they have introduced the new tax regime in which the tax rates are what you call minimum. The benefit is given to the basically up to the 25 lakhs income. Those who are earning into 25 lakhs income, the slab rates are very slowly increasing from 5%, 10%, 15%, 10%, 15%, 20%, like that, directly, not 30%. So they have given the more benefits under the new regime. So now please try to understand. You have to be very careful about the new regime and old regime. You have to select the deductions. Particularly, the standard deduction is going to be different for under old regime as well as under the new regime. So you have to please very careful about this, that which regime, which system you are going to follow. Accordingly, you will get the benefit of that. Now, everybody is going to use the software. You are all aware of that. There are ready-made software available. But in that case, you have to select the proper option, whether you are opting for new regime or old regime. So please try to understand, the selection of proper regime is necessary. Again, you are going to ask me the question whether we are able to switch over from one regime to another. Yes, software is also going to provide you or giving you the facility to select the proper one. So you can calculate your tax liability by both ways. Government has given you the option to which is benefit to you, that the assessee has to select which tax regime, which tax system is beneficial. You can select the appropriate tax regime. But the standard deduction is going to be again different. In old regime it is maybe the 50,000, and in case of new regime it is going to be 75,000. So please try to understand why it is necessary. Now you can again check if your income is from salary. You have to be very careful whether the relationship is of employer and employee. Second thing is that you have to check the properly the new regime, whether it is you are selecting old regime or new regime. Facilities available. You can calculate the tax by old regime. You can calculate the tax by new regime. Find out which is suitable to you, and in that case, which is suitable, जो तुमको अच्छा लगता है, जो तुमको टैक्स का बर्डन कम करता है, वो तुम सिलेक्ट कर सकते हो. लेकिन प्रोविजन चेंज होने वाले हैं, बेनिफिट चेंज होने वाले हैं, डिडक्शन चेंज होने वाले, दैट वहाँ हमको ध्यान में रखना चाहिए. सो बी वेरी केयरफुल अबाउट दिस. Now another profession tax. If you are going to pay tax on your profession, that is also going to be deductible under the income from salary. So we have taken income from salary first. Second thing is that income from house property. Again, the income from house property is different from income from salary. In case of income from salary, the relationship is of employer-employee. Now, what is the criteria for income from house property? The criteria is that you must you must have a land or a building. You must hold the land and building during the particular year. We are talking about the financial year, or particularly in Income Tax Act previous year. Second thing, that land and building you are possessing you must be owned by that. You may be having land and building, but or flat, or maybe a bungalow, whatever may be, you are holding, you must be the owner of the property. And the third condition, that the same land and building or house property you should not hold for business or profession. If you are holding that property for your business or profession, then it is not income from house property. So please try to understand, you have to fulfill few conditions. That is, one is you must have land and building you are holding during that previous year. Second thing is that you must be the owner of that land and property. And third one, that property should not be owned, used for your business or profession. If you are holding the property and using for your business or profession, then it is not income from house property, but it is income from बिजनेस और प्रोफेशन. गवर्नमेंट ने छोड़ा नहीं है यहाँ. गवर्नमेंट छोड़ दे, हाँ, ऐसा ऐसा मत सोचो कि हाँ हमने बिजनेस को यूज किया है या हमारा प्रोफेशन के लिए यूज किया है, सो इसका मतलब हमको हाउस प्रॉपर्टी का इनकम के ऊपर टैक्स नहीं आएगा. गवर्नमेंट से इनकम इज गोइंग टू बी टैक्सेबल, बट नॉट अंडर द हेड इनकम फ्रॉम house property, but it is income from business or profession. So very clear. Now next is that again going ahead, if the properties you are holding for your own purpose, then they be called as a self-occupied property. But if you are holding the property but given on rental basis to someone else as a tenant, then it is going to be a let out property. So property basically is of two types: self-occupied property or let out property. Government is not going to say how much property you are supposed to hold. तुम एक फ्लैट ले सकते, दो फ्लैट ले सकते, तीन फ्लैट, कितना भी, it is up to you. You can take any number of flats, but it is necessary to declare at the time of filing the return that income from house property, how many properties you are holding. Again, the government asking you the question whether it is a self-occupied property, that means it is owned by you for your own purpose, or it may be a let-out property. You are given on let-out, किराए पे दिया है. Now again you are going to ask me the question, how the government is going to come to know? The government, first of all, it is government is going to say you have to declare yourself. Self-declaration is going to be there. Second thing is that government is also going to find out different sources of income. Now, please try to understand, be very careful. I am giving you some practical guidance that government is using artificial intelligence. So, government can check your agreements, government can check your documents, and they can find out whether you are holding any property, whether you have declared all the property or not. Now, the government has also introduced AIS, which is long back. You may be knowing 26As, form number 26As. So, government is going to get some information by different source. If you are declaring the income information, it is self-declaration. But government may be getting from other sources, from government office, from banks, from sub-registrar office. They are getting all the information by different sources, and government is going to check whether you are showing your income under the proper heads. They are also going to observe whether you are going to show the your income by proper heads. That means it must be a income from salary, then it should be an income from salary only. So they are going to check. So this is income from house property. Now income from house property, their government is giving very limited deductions. Deductions are very limited. In case of self-occupied property, their only deduction is available is the interest on home loan taken by you. If the home loan is taken, then you are going to get the interest part of it as a deduction. Now please try to understand, you are making the repayment of loan in totality. It includes both. You are going to pay interest on some part of your principal, but the benefit you are going to get under this head, income from salary, only the interest part, interest portion. Now take the example of a case, if you are holding any flat, you have taken on loan from bank and you are paying the EMI. Your total EMI you have paid during the year is of rupees, suppose 50,000. It includes 40,000 interest and 10,000 rupees as a principal amount. So you will going to get the benefit of only rupees 40,000, not 50,000. So please try to understand, the interest portion is deductible. Now, in case of self-occupied property, we are not going to show any income because property is owned by myself or the person who is holding the property, and he is not getting any income. So what we are going to show? Annual value as 0 less interest paid on the house property. So we are going to get the deduction. Coming to the let out property, the government has given some concession because you are going to get the rent from the tenant, and for that you are going to incur the number of expenses. So government is going to say, first of all, if you are going to get the income, there are criteria. You select the proper criteria. Then they have given the rateable value. Another thing is that municipal valuation. Third is actual rent received. In some cases, the Standard Rent Act is applicable. So accordingly, the government is going to say you select the proper criteria and determine your income from house property under let out property. Now, once you are and another thing you have to keep in mind, government is also revenue minded. Government is going to collect more and more revenue from you or from the taxpayer. So you have to be very careful about the calculation. Now, government is going to say on the one part you are getting the income, simultaneously you are incurring some expenses. So if the municipal taxes you have paid during the year, property tax, then you will get the deduction. That is one. Second thing is that you will get a standard deduction irrespective of any expenses of 30% of this value. Suppose you are going to get 100 rupees as a rent, you will get standard deduction of rupees 30. But once the standard deduction is you are allowed it, you will not get any expenditure for maintenance, for painting, or whatever repair purpose. Nothing. Your expenditure may be zero. Your expenditure may be in lakhs of rupees. Thus, you will get the benefit of only 30% of standard deduction of the amount received or the annual value of the property. So that we have to keep in mind. Again, the government is going to say if you have taken a loan, so you will get the benefit of interest on that property. Just self-occupied property, you also can claim the interest. So interest portion is also you are going to get the benefit of that. So that is income from house property. Going ahead, taking into account the time, 10 minutes are there. So I'm going ahead with this third one, that is here profit and gains of business and profession. That means if you are going to carry any income by way of carrying any business may be of different types. It may be a manufacturing, it may be a trading, it may be a agency business, any type of business. It is covered. It may be a profession, maybe a doctor, maybe a lawyer, maybe a chartered accountant. So they are having the any kind of profession. So if you are having your own business or your profession, you are liable to pay the tax under that head. It may be a running in proprietary capacity. It may be a partnership firm. It may be a private limited company, LLP, any form. If you are getting any business income or any income from profession, it is covered under the income from business and profession. Now, again, you have to prepare in case of income from business and profession. You have to be very careful about preparing profit and loss account and balance sheet. So accordingly, the government is going to say you have to pay the tax as per the profit earned by you. They have given some criteria regarding the determination of income under the head income from business. And in case of income from profession, they are going to use the word, it is going to be a income and expenditure, that is net surplus, you are supposed to pay the tax. So there are a number of deductions available. If the expenditure is incurred for the business purpose, you will get the deduction. That is going to be the revenue expenditure you are going to spend. You will get the deduction of different types of expenditure you have incurred. Similarly, if there is any assets you are holding and you are using for business purpose, then you will get the depreciation on that. So that you are going to determine the net profit, and accordingly you have to pay the tax on that net profit. So income from business and profession, the calculation is on the basis of net profit or net surplus. Again, in case of business and profession, two things you have to keep in mind. That it is mandatory to prepare profit and loss account and balance sheet, or income and expenditure and balance sheet. And second thing is that you have to select the proper method, mercantile system of accounting and cash system. The government has given option only to the, please try to understand, it is only option is given to the professionals to apply the cash system. Otherwise, mercantile system is compulsory, it is mandatory for all types of business. So that is very clear. Now, again, going ahead with the next, income from capital gain. Now, what is meant by the capital gain? The capital gain means if there is a transfer of capital asset during the year, you are supposed to pay the tax on that. It is different from income from business and profession. Please try to understand. Capital asset means property of any type. It may be a tangible, it may be intangible, it may be a fixed, it may be a movable, it may be immovable, it may be a rights. You may be having copyrights, you may be having a what do you call royalty, like that. So whatever maybe you are that you are having any capital asset you are holding, you are supposed to pay the tax on that. So the capital asset is again classified under the two heads. That is going to be the short term capital gain and long term capital gain. Now मैंने जो पहले बात किया था कि गवर्नमेंट दोनों ही चार्ज कर सकते हैं, स्लैब रेट से और फ्लैट रेट से. तो कैपिटल गेन में गवर्नमेंट ने शॉर्ट टर्म जो होता है उसके ऊपर स्लैब रेट लगा सकते हैं एंड लॉन्ग टर्म के ऊपर ज़्यादा करके वो फ्लैट रेट लगाते हैं. सो द गवर्न इन केस ऑफ कैपिटल गेन यू हैव टू बी वेरी केयरफुल वेदर द टैक्स इज पेएबल एज स्लैब वाइज और फ्लैट वाइज. नाउ अगेन यू आर गोइंग टू आस्क मी द क्वेश्चन, कैपिटल गेन में क्या क्या आता है? तो प्रॉपर्टी ऑफ एनी काइंड, you may be having flat, you may be having shares, debentures, bonds, mutual funds, which is very popular now. So if you are going to transfer, you are going to sell these securities or the assets during the year, then it is not a income from business. Even though there is a profit or it may be a loss, it is going to cover under the head income from capital gain. It is not income from business and profession. So you have to be very careful about the transfer of your investments and the property you are holding. Please, again I am going to repeat here that property may be of any type, may be tangible, intangible, movable, immovable, whatever nature it may be. If it is transfer, if it is sale, exchange during the year, you are liable to pay capital gain on in the that year. Now the last one, because very few minutes are available with me. The last is the income from other sources. So what is the criteria for income from other sources? The income which is not covered under the four heads of income. पहले income from salary, house property, business and profession and capital gain. इसमें नहीं आता तो वो आता है income from other sources. So like take the example of a case, interest on FD with bank, interest on a savings account, maybe the dividend you are going to get on shares, mutual funds, interest on debentures. This is all covered under the income from other sources. So in case of income from other sources, again you have to be very careful whether there you are getting any income not from the employer but other than the employer, or it may be possible that you may be having some casual business. You are not doing business regularly. Maybe fireworks you are selling, or some what do you call? You are doing the business of selling the dry fruits during the Ramzan season. Then it is not your business as a income from business or profession. They are going to say this type of business is of seasonal nature, casual nature. So in that case, you have to show that income under the head income from other sources. So please try to understand. The government is going to collect the tax by under the five heads of income. Then we are going to calculate the income from each head of income, take the total of that, and that total of five heads we are going to call as gross total income. So that we are going to call the gross total income. So first of all, we are going to classify the income under the head income, taxable income and non-taxable income. In taxable income, further classify under the five heads, and then take the total of that and be called as gross total income. Again, the question is that if you are going to pay the tax on the gross total income, then why we are classifying the income under the five heads? The government is going to say the benefits, the deductions, the provisions are different under different heads of income. So the assessee should get the benefit of that deductions, provisions, or maybe the what you call concessions given under the particular head of income, and then they are going to be able to pay the tax on the gross total income. So it is very clear. Now the last part is that government is going to collect the tax. Now you are going to ask me the question, how the government is going to get the tax? There are two types. Government is going to collect the tax by way of TDS, tax deducted at source. That means the person who is making the payment is supposed to deduct the tax of the person to whom he is making the payment, and they are going to deposit with the government. So government is going to get the tax by way of TDS. Another way of collecting the tax is that payment of advance tax. The person who is not able to contribute by the TDS, he himself has to calculate his own tax, and he has to pay the tax into the government during the year, and that we call as an advance tax. So government is going to get the tax by two ways, by way of TDS That means suppose employer is going to pay the salary, it is the responsibility of the employer to calculate the tax of the employee, find out the tax and deduct the tax before making payment to the employee, and deposit with the government. So that we call it as a TDS, tax deducted at source. And if the employee or the person is getting income which is not deducted by the any by way of TDS, then he himself has to or herself has to pay the tax to the government by way of advance tax. So only 2 minutes are there. Any query, any difficulty? Once again, I am thankful to you for giving me an opportunity for patience hearing. I am thankful to the Vakil sir for selecting me to give the lecture. Hope that the tax is very tedious matter, and calculation part is there. Again, it is a burden. So naturally, everybody is worried about his own calculation and payment of taxes. Once again, thanks. Okay.
Thank you very much, sir. It was a wonderful session. Now the session is open for the question. I will allow all the participants to speak.